Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 15th of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address is rshaw@fxcm.com. And I'm just going to go ahead and bring up our disclaimers. In the meantime, can I just double check that you guys can hear me? Can you see me? And can you see the screen? Hi, Michael. Morning to you. Matthijs, thank you very much. Morning. All right, excellent. I'm using a new headset. Can you guys hear me clearly? Just want to double check. Is it coming through fairly clear? Okay, brilliant. All right, let's bring in the next market commentaries disclaimer. Hey Mia, morning to you. Nice to have you on the webinar. Howard, morning. Welcome to everyone. All right. I'm just going to move to the references screen. I'll keep the references on. And it's, again, just to reiterate, we're in a very difficult market. Yesterday, going through the morning market review yesterday, I think we highlighted how difficult it was. There was a ton of very good questions about interest rates. The interest rate environment is sketchy, to say the least. I want to show you the 2-year yield here. This is the US government note, the 2-year note. It's a very good proxy for what the market thinks the Fed is going to be doing in terms of its monetary policy. Now, just take a look at this huge sell down until the low. So we're looking at a weekly chart. Let me put it on the daily, so you'll see what I'm talking about. So you can see there, on Monday there was just this huge sell down. Then yesterday the sell down continued, but then there was a reversal. And what we want to do here is actually combine the last two candles just to show you how uncertain the environment is. So what I'm going to do is I'm going to take the range from the high of candle 1 to a low of candle 2. So we've got a massive range here. So just a ton of emotion in terms of the trade on the notes. Okay, let's just pop that there. So you can see a huge range. And now what I'm going to do is I'm going to take a measure of the real body. And we've got the real body as such. And you can see once we've combined these two candles, what kind of candle do we have? We have a spinning top. We've had market hawks trying to take price up. We've had market doves trying to take price down. By and large, the real body is red and down. We want to keep an eye on this. What has been priced into the market now is 25 basis points coming through next week, which is on the 22nd. That's down from last week where there was a pricing in of 50 basis points, and the market adjusts. It's always forward-looking. If the market thinks that there's going to be 50 basis points, it's going to price in for 50 basis points. If that changes to 25 basis points, the market adjusts for that 25 basis points. Now, what happened yesterday is we saw inflation come in, the CPI, and after the CPI came in, I'm just going to go back to the daily. Let's take this out. I'm going to go back to the daily. You can see that the market started adjusting in for a 25 basis points. And if we go through to our, this is our core inflation right now, it's dropping, okay, it's at 5.5%. What you can see is that it is dropping, but it's actually starting to, the gradient starting to shallow out. It's not as steep. So it's dropping, but it's not dropping at the speed that it was dropping at. In other words, all the low-hanging fruit, all the items that were going to react quickly to the rate changes, that seems to have taken place. Now we can see that it's dropping, but at a slower pace. The bottom chart here is the rate of change of this core inflation rate. That's still showing deceleration. So it's moving in the right direction, albeit slower than the Fed would like. I took a look to see if the median inflation was out, and the median inflation hasn't been released yet by the Cleveland Fed. So we'll take a look at that tomorrow or the following day, just to see how sticky the median stuff still is. But the 25 basis points probably going to come in because the rate of change is starting to shallow out here. All right, with that all said, let's start doing a top-down analysis. I want to do a top-down analysis of the NASDAQ. I think the NASDAQ is a fascinating chart. And if we take a look at the weekly chart here, all right, let's put in our reference trough, let's put in our reference peak, let's put in the higher trough, let's put in the higher peak. All right, so far so good. On the NASDAQ, we got a really good looking trend, and it's pulled back, and we've taken a look at this before, right into the support area. And you can see if I move it across, there's a fair amount of price support here. Now, what we want to double check here, okay, let's just take this out, is we want to see if we're going to get the higher trough here. So I want to just take you guys through what I'm looking for in terms of the higher trough. So I'm going to put in the HT question mark. And what we're looking for here is reference candles. Okay, so you guys should be familiar with the reference candles. I'm just going to go through them very quickly for you. If anyone is a little lost around them, just let me know. But basically what we're looking for is a 3-candle pattern, right? A 3-candle pattern. And effectively, we're looking for a candle that's got the lowest low. Well, it looks like this week's candle may have the potential lowest low. Can you see that? So I'll put in the ellipse here, and then I'll put in the ellipse here. So now it really comes down to what's going to happen next week. And next week, we're going to get the rate announcement. And with that rate announcement, we're going to get a statement, we'll get a press conference, and I think that's going to be a large driver to see if we can get the technical reversal here, if we can get the higher trough. Okay, so we do have an uptrend. Now we want to see if we get the next piece of that uptrend, the next higher trough in the series. The RSI is on the right side of 50. As long as it stays on the right side of 50, I'm happy with that. If it dips below 50, I'm not going to be so happy with that because it's going to impinge on the uptrend. Now, let's take a look at the daily chart. I want you guys to keep in mind the reference candle, because if we go through to the daily chart, we actually do have a reference candle here. Yesterday, we had a very strong NASDAQ, but take a look here. Here's the reference candle. Can you guys see that? Let's just put our 3 candles in. So you're going to have 1, 2. Now the second one's going to have the lowest low. The third one needs to take out the reference candle's high, and it needs to close above the reference candle high. So we've got now 2 things happening on this chart. We've got a reference candle reversal that's coming on the daily. Okay, I like that. And it's moved out of the bearish area. I like that too. So a movement from zone 3 into zone 2. Well, that's a movement, a relative movement of strength. Okay, so I like what we're seeing on the NASDAQ here. And the stochastic has started moving up towards that upper quintile. We want to keep an eye on this. Now, we go through to the hourly chart here, and the movement really started yesterday. Okay, so you can see that it was we basically got a two trigger system here. The first trigger is the EMA moving positively. It crossed positively. The second is actually the stochastic crossing over and moving up. So I don't have the percent D here, but it would be crossing up. And the idea is, let's see if I can put it in. Yeah, so you can see there's the cross. Okay, and it's moving. And guess what happens? It moves into that upper quintile and it holds. As long as we hold that upper quintile, we're going to have some underlying momentum there. So we've got the triggers, and then once the triggers were pulled, the stochastic cooperated, and we had a really nice swing. So that was a really nice swing on the Nasdaq yesterday. Let's just do a similar type of analysis for the DAX. Okay, let's just take a look at the DAX. All right, let's start at the top. All right, now the DAX, I've been very impressed with the way the DAX has moved since its low for the 1st of October. You can see once we've got the reference trough, the reference peak, here's the higher trough, here's the higher peak. Now, this was a really tough chart. The DAX has been moving sideways since the beginning of February. Moving sideways is really tough to trade. It's very hard to trade something that's moving sideways, and it was moving sideways. Okay, and then we had the SVB failure, and then it actually dropped out of this rectangle, so it broke down. Okay, so that was interesting. I was expecting this test of the resistance here to possibly break through the resistance. Didn't happen, and in fact the opposite happened. It broke down. Now I just want to go back to the weekly chart here, because what I want to do is bring in our reference candles. Okay, we've got an uptrend. Of that we can be certain. Now the fact that we've got an uptrend, beg your pardon, let me just get rid of this. Okay, let's put in the reference here. Let's put in the reference here, so you can see the thinking here. So all of a sudden, next week's Federal Reserve announcement is going to be very important, because it's going to serve as a catalyst. Are they going to be more moderate going forward because of the loss of confidence in the banking sector? Now, it seems that by and large, the loss of confidence in the banking sector seems to have been temporary, but let's just not discount it just yet. What I want to do is I want to be very much mindful of the fact that it looks as if we're getting the next higher trough, the next higher troughs. One on the Nasdaq, one on the DAX. Take a look at the DAX's momentum. It's nicely above 50. It's beautiful. As long as it stays above 50, then I think that we can potentially get this higher trough. Once we get the higher trough, then we start looking for the next higher peak, right? So the candle that broke down is not a confirmation that the trend starts going down. The truth of the matter is, Mia, is that this breakdown here does look fairly meaningful, right? What we're trying to do here is effectively a top-down analysis. If I have to say, what is the primary trend? Is the primary trend up, or is the primary trend down? Well, the primary trend, we try and get in a bird's eye view, and the bird's eye view is saying, well, hang on a second, we've got a higher peak. Now, this higher trough here, I've put a question mark. I don't know where this next higher trough is coming in. This breakdown over here may carry further, it may carry down further, right? Sorry, it may carry further down. I beg your pardon. If it carries further down, then we're going to get another candle like that. We're going to get a candle like that. And if that's the case, we're going to have to adjust our analysis. So right now, we're in the middle of analysis. We cannot draw any conclusions yet because we haven't got a full signal yet. So the breakdown on the daily is something to keep an eye out for. But take a look at the support on the weekly candle. We do have a support tail, a buying tail that's come in. What I'm looking for now is to see if that buying tail holds. I don't know if it's going to, okay? We're going to have to watch it very, very carefully. And if it holds, okay, then we're going to need that's only part of the signal. That's not the full signal. The next part of the signal is the follow through. And that we're only going to know at the end of next week. And because that's going to be only at the end of next week, all of a sudden it makes the Fed announcement really much a focus for us in terms of the technical signal. Yeah, exactly. So you work from the top, and we go down. So it looks as if we are certainly in an uptrend here. Can I call the higher trough here? No, that's not what I'm saying. I've got HT question mark. I've only got a fraction of the information that we need. But if we go to the through to the daily chart, it's not quite. Let's just go back to the Nasdaq. Okay, you can see that the Nasdaq here, the Nasdaq has got this nice reference candle here. We go to the DAX. We're still waiting for the DAX to show some sort of cooperation. So today it becomes quite an interesting day. We're sitting in the middle of zone 3. It comes back to Maya's question. Okay, to Mia's question, I beg your pardon. Is this significant? And let's see if it pops back into this, or if it carries on moving down. Now, if it carries on moving down, okay, that means we're going to have to probably relabel this higher trough here. And that's okay, because as long as we have price above this, we're okay in terms of trend. Okay, the trend, if we have to put a, let's put it there. We're not even back to the 62% retracement yet. So there could still be some sort of movement here that we have to keep an eye on. But what does it mean for us? It means we're in the midst of a very tough trading environment. The last few weeks, the last few days has been as tough as I've ever seen. As tough as I've ever seen. That means that there has to any trades that are implemented must use stop losses, must use money management. Now that should be for every single trade, but when we've got heightened risk, well, heightened risk is heightened uncertainty. Heightened uncertainty, you have to be very, very mindful when you're putting on a trade in terms of your risk management and your stop losses. All right, we're going to stop here because we have our crypto minute. I'm going to conclude at this point. I'm going to cross over to our crypto minute. Anybody that would like to join us for our crypto minute, certainly most welcome. I want to wish everyone a very good day ahead, a very good evening, and we shall chat more about this tomorrow. Try and follow the puzzle that's unfolding in front of us. Thank you very much for joining me this morning, guys.